Okay, so in this video, I'm going to talk about who actually uses financial statements. Um, so actually the answer is that there isn't one group only that uses financial statements of a company. There are many different groups. And these groups would include management. Actually, managers would tend to create their own uh, management accounts. So this is different to normal accounting. Management accounting is trying to create financial accounts documents which are reflective of performance and can show where the managers should focus their attention and resources in order to improve and increase profitability, and identify areas in which they're lacking. So managers would use financial statements. Owners of the business would use financial statements as well. So in big, large public companies, um, there is a separation between the owners of the company and the management of the company, i.e., the shareholders of the companies who are the owners and the management, i.e., the controllers of the company. So it's very important for the owners, i.e., the shareholders, to be able to um, actually understand and see how the company is getting on, um, and to make sure that the managers which they have hired to run the companies are doing a good job. And if they need to fire management, if they need to change a strategy, if they need to uh, reconsider the compensation packages for managers, this is all information which they can come to a conclusion from after reading through the financial statements. Okay, who else? Uh, People who do business with a company. Let's think of a supplier. A supplier would be very interested in the in reading the financial statements of a company, because from reading the financial statements they get an indication of the financial health of the company, and they can determine whether the company is growing fast, whether they believe that in the very near future this company will be huge, and therefore if it is going to be huge, maybe they would want to try and entice the company to become a loyal customer of the supplier by providing them better deals, and loyalty packages. So another group would be creditors. Creditors provide finance for a company, and essentially creditors win when a company can pay back the credit with the additional interest, and creditors lose when the company cannot pay back the loan that the creditors give them. So, of course, it's very important for a creditor to uh, have a real understanding of the company and to read through its financial statements and reports. And of course, the reason why is because they are trying to determine if this company is a company which will be able to pay back any loans which the creditor provides the company, and also determine how risky this company is. If it's more risky, then the creditor will need higher rates of interest on its loan. If it's less risky, then they might provide them with a lower rate of interest on their loan. So they'd look at things like how much debt does a company already owe to other creditors? Um, how much cash does the company have lying around to be able to pay back debt? Um, is the company growing fast? What will they use? What are they using the credit for? Are they generating profit from these activities, in enough profit to be able to pay back the original amount. So these are some things which the creditor will look at. Who else? Customers. Um, when talking about customers, you probably have in your head like the image of me or you as the customers, um, but I think it makes more sense if you think of a customer as another business. Um, so let's say that I'm a car manufacturer, and let's say that um, no, sorry, let's say that I am a small business which creates which prints labels, okay, and I am a customer of let's say I'm a car manufacturer and I'm a customer of this small business which prints labels. Let's say that I need them to help me print labels on the car seats or something like that. So um, it's basically being a business being a customer of another business, larger business. So yeah, why would a customer be interested in understanding how good the company which they are uh, being a customer of is doing? Well, I don't really know, to be honest, but I'm sure there's some good reasons. Okay, so the next one would be government and government agencies. Um, Governments are generally interested in how companies are doing for, I think, probably two main reasons. The first and most obvious one which comes to mind is uh, to get an idea about how much tax they can generate from this company. Um, if you think about it, government's uh, revenue comes from taxation, so it's crucial for the government to be able to predict and forecast the amount of tax they can generate in any given year. And they can do this by looking at financial statements of a company over the past few years and trying to look at the trend and see if they're going to continue growing at that same trend for the next few years. And then once they have that information, they can try and see how much tax they can get from the company going forwards. So the second reason would be, I suppose, um, to really be able to determine um, how the economy is growing. Is the economy growing? Um, Economic growth, and they do this. Obviously, the economy is an aggregate of uh, individual businesses. It's businesses which run the economy. So by looking at financial statements of many different businesses, especially the larger ones, they can get a feel for how the economy is moving and in what trend. Okay. Employees of the company. Why would the employees want to read the financial statements? Good question. I suppose that um, you want to. If I was an employee at a company, I'd want to be reimbursed appropriately. So if the company um, is just being flooded with profit and they are not paying their employees well enough, if I had this information, I could possibly create a trade union and demand for increases in wages. And you know, my argument would be that there's plenty of profit to go around, based on from what financial statements. I think other reasons. would be less quantitative reasons. Oh no, 1 second, my computer's just turned blank. Okay, I think other reasons would be more less quantitative reasons like corporate social responsibility. Um, this is usually included in the financial statements, but it's separate from the actual income statement, balance sheet, and cash flow statements. It's the actual annual financial statements are like 100 pages long, and usually the corporate social responsibility section would be um, in the first couple of pages. So, as an employee, I'd want to know that I'm working for a socially responsible company, and um, I'd want to know more about with what initiatives my company is taking in order to make um, societies, communities, and the world a better place, really. And the general public, I think they'd be interested for the same reason, really. These are some of my ideas. I'm sure there are many other reasons and many other groups which may be interested in getting their hands on the company's financial statements. Um, Providers of finance also includes equity investors, not just creditors. So, people who want to invest in a company would obviously have to research that company thoroughly and be able to understand exactly um, how it's been performing and what position it's at now before making a decision whether they would want to invest or not in that company. So hope that video was useful and stay tuned.